Hey guys, football season is here, and those guys are out on the field going from first down, second down, touchdown. I want to give you guys some moves as to what you can do as we wrap up this last quarter of the year. Some tax strategies that you can implement right now that will help you so that when tax season arrives, you don't owe Uncle Sam. I'm Dr. Cozette White, America's #1 tax and accounting strategist. I work with 6 and 7-figure CEOs, 7 service-based CEOs to help them reduce their tax liability, to implement key performance indicators so that they are reaching those goals. Help them understand what is a balance sheet, a financial statement, and a statement of cash flow. Not so much what is it, but how do they interpret it? How do they stop leaving money on the table and look at some cost savings, some cost strategies? All right. I work with my tax professionals to help them grow, scale, and leverage virtual tax firms. So let's go ahead and jump into what it is that I want to talk to you all about today. So we are talking about smart moves to help you improve your tax situation. All right. So I wrote down some things. So you guys are going to see me with my head down from time to time, looking at my notes because I wrote down notes to ensure that I give you all the valuable information that I possibly can. So one of the tax strategies, if you are a business owner, that you can use is you can actually put your family on the payroll. Now, if you put your family on the payroll, there are certain things that you must do, that you must comply with so that the IRS is not knocking on your door. Number one, you need to first of all make sure that you have the proper business structure set up. That means either you are a limited liability corporation, you are an S corporation, a C corporation, or some other entity. But typically we're talking about our LLCs, our S corporation, and our C corporation. Making sure that you have the right entity is number one before you decide that you want to put your family on the payroll. Okay. Now there are some strategies that you can use, especially if you are working with younger children. You can pay them up to the standard deduction amount. Now that amount changes from year to year, you all. So I don't want to put this number out there because if you watch this in 2025, the standard deduction will be a little different. But verify what the standard deduction amount is, and you can put a child on the payroll up to the standard deduction amount, and he or she will not have to pay taxes. And you can write that off as a tax deduction. Okay? Make sure that you keep documents. Make sure that everything is in paper, on black and white, making sure that when you pay those children or those family members, you issue a paycheck to them or a payroll, something out of your operating account if you don't have them on payroll, but a check that goes through your operating account. They make sure that they deposit those funds into their account so that everything is trackable, everything is traceable. If you have them on your payroll, then that means that you are paying payroll taxes to them. You're issuing them a Form W-2 at the end of the year. You're submitting a Form W-3, okay? So talk with a professional if you're unclear about how to go about hiring your family members so that you can take advantage and reduce your taxable liability as the business owner. Make sure you're filing on time, okay? If you determine or you come into a situation and you cannot file your return by the due date, if you are a S corporation or a partnership, that is March 15th of every year, or the third month, the 15th day after you've closed down your business. So if you've determined that you're not in a position to meet that deadline, speak with a professional and make sure that you are filing an extension. I don't know if you guys realize this, but when you don't file your return on time, you're building up a negative history, a negative relationship, so to speak, with the Internal Revenue Service. When you file an extension, also, you're just getting an extension to remit the tax return. If you have a tax liability that is due to the Internal Revenue Service, they are not saying, okay, you have 6 months to pay us. It doesn't work like that. They are still expecting you to remit that tax liability to them, and you can submit the paperwork later, okay? If after submitting the paperwork and it is determined that maybe you have a refund coming back, or maybe you still owe, then you can pay the difference and reconcile and clean things up once you filed the extension. So let me run down the due dates for you. If you are an S corporation or a partnership, the due date is March 15th. You can file an extension, and by doing so, you have until September 15th to do the extension. That's just the extension, you guys, getting the tax return in. That's not talking about any liabilities, okay? If you are an individual, meaning, you file a 1040, or if you are a C corporation, you have until April 15th, or if you get in a 6-month extension, you have until October 15th. All right. If you are a not-for-profit, typically that is May 15th, or you have until November 15th to file an extension. However, if your organization is on a fiscal period, then the dates can vary as to when the tax return is due. Again, you want to speak with your professional. You want to look at your acceptance letter that the Internal Revenue Service sent you when they acknowledge that you are a nonprofit organization, a 501c3. That letter told you what form you are to file. It also told you when your tax return is due. Okay. Start establishing yourself an IRA. Okay. You can do a Roth or a traditional. Okay. But if you are looking to reduce your tax liability, you want to see about contributing to a traditional IRA that will reduce your tax liability. Now, here's the difference, you guys. When we talk about a Roth IRA and a traditional IRA, a Roth IRA means you are contributing to a retirement fund on after-tax basis. So when you pull those funds out on the back end, you're not paying as much in taxes. You do pay taxes when you pull money out. There's this misconception. You're only paying taxes on the amount, and we're talking about a Roth IRA, on the amount of accrued interest and dividends on that Roth IRA, not the physical amount. So if you deposit $10,000 and when you go to pull it out, say it's at $12,000 over 15, 20, 30 years, I don't know, just throwing some numbers out. The $2,000 is what you will be paying taxes on. But if you contribute to a traditional IRA, you can write those contributions off on the current year's tax return. On the back end, though, you are paying taxes, okay? So it does help you on the front end. You can start a flex spending, okay? Most employers have this as an option to their employers. If your employer does, see if you can take advantage of the flex spending opportunity or the perk that they have for you. It's pre-tax, which means it's gonna lower your taxable income, all right? And then you wanna make sure that you are giving back. Give back to some type of charity, okay? What organization do you like? What organization has a cause that you are in alignment with, okay? Is it the American Heart Association? Is it a organization that gives back to education? Is it an organization that feeds into foster children? What type of organization is in alignment with you that you can give back to? All these things will help reduce your tax liability, guys. The purpose of this is talking about things that can help you reduce your tax liability. We're in the fourth quarter. I said to you guys earlier, it was football season. We have touchdowns, first down, second down, third down. Look, I don't know nothing about sports, to be honest with y'all. But listen, we are in the final stretch. And I want to start coming to you guys, giving you some tips, some things that you can implement right now, today. Don't wait until December 31st. It may be too late, okay? Implement these tax strategies right now or start putting together a plan so that you are executing between now and the end of the year so that come tax time, you don't have a tax liability. Or if you do have a tax liability, you've utilized all of the strategies that are available to you to get that number down, okay? Sometimes it may be inevitable to wipe a tax liability to zero, sometimes, okay? But you want to make sure that you are utilizing, implementing, and executing these strategies that I will be sharing with you over the next several weeks. All right. Listen, if you have any questions about anything that I said in this video, please take a moment and leave a comment down below. Make sure you like my video, make sure you subscribe to my video, and make sure that you follow me. I oftentimes will upload pre-recorded videos, pre-recorded YouTubes, but that's okay. It's all about the content, you guys. I like to say it's about the content and making sure that I am giving value-added content that can help you. All right, so listen, subscribe to my channel. Make sure that you follow me, and I will see you on my next live, okay? Have an awesome and amazing day.